Welcome to Building the Premier Accounting Firm, having a successful accounting, bookkeeping, and tax business. I'm Roger Knecht, president of Universal Accounting Center, and I've been working with accounting professionals now for more than 20 years, helping them both start and build successful accounting businesses, offering quality accounting services to ensure that they can get paid what they are worth. More importantly, we actually work at Universal Accounting Center to provide and offer the training, certification, coaching, and support accounting professionals need to be in business for themselves, but not by themselves. Today, I'm excited to have an individual on with the show, Tyler Clark, who actually has a great deal of experience that I'm sure we're all going to be able to relate to. Tyler is the founder of Dream Firms. Prior to launching Dream Firms, Tyler built and had a successful business offering accounting services and grew that to six figures in new growth over 2 years. And from that, he was able to actually go into some other great services. He is well versed in a variety of sales and marketing strategies, both online and offline, for accounting firms, and has worked with accountants all over the world, the United States, and has been doing this for a decade. So the other thing I'd like to point out regarding his business, Dream Firms, is it's actually a digital marketing and sales coaching solution for entrepreneurial accountants. So with that, I think it's very appropriate to have him here because he has a mission, and it's essentially to help entrepreneurial accountants to achieve financial freedom in 10 years or less through his systemic growth of their accounting business by attracting and winning the businesses of their dream clients. So very appropriate for what we're going to be discussing today. So Tyler, welcome to the show.
It's an absolute pleasure, Roger. I want to say thank you so much for being on. And I just also want to say very quickly, you, my good friend, have an incredible voice. I feel like you were born to either do podcasting or radio. It's very soothing to listen to. So thank you so much for having me on the show.
That is very good. I appreciate that. I've been told for years, literally since I was perhaps 16, that I ought to be on radio. I've done podcasts, I've done radio, I've done voiceovers. So this podcast has kind of been fulfillment of a lifelong dream where, yes, life takes us where we go, but this is one of those things where I kind of feel like maybe I was destined for this. So this is kind of fun. I enjoy it. Thank you.
Yeah, absolutely. My pleasure.
So what we want to do here is everyone listening in is either starting or building their accounting business, whether it be they're solo entrepreneurs or they actually have an established firm with employees. Either way, they're definitely going to be able to relate to your story. You have a phenomenal journey of starting on your own and building what you built. But before we get into any of that, I want to go back even further and just kind of ask what drew you initially to the accounting profession. How did that journey start?
Yeah, it's a fantastic question. So it's kind of weird to say that you're born into something. I don't put too much faith into sort of legacy, but at the same time, it's important to kind of account for where this all started. And it really started with my grandfather. He started an accounting firm. He went from selling soap door to door in the recession to becoming a bookkeeper.
Wow.
And really pioneered some pretty interesting marketing techniques at the time that were not necessarily commonplace. He used my father to go and speak to local small businesses outbound, right? That really didn't happen back in, when was the 70s, let's say?
Wow.
And it was actually not allowed by the CPA board, right? You weren't allowed to market or advertise, kind of a boys club, quote unquote, so to speak. And my grandfather we'll say, was experimenting since he technically wasn't a CPA. And my father took those techniques and methods that he really refined through working with my grandfather. He launched New Clients Incorporated. They've been in business for 30 years. I'm 30 years old. So literally, there's never been a moment in my life where sales and marketing, specifically for the accounting profession, has not been a part of it. So I have kind of a strange background from the standpoint that I literally grew up around the dinner table like, Mommy, Daddy, how do we get our accounting clients better results? Like those words actually came out of my mouth. So that's pretty much where it started, from grandfather to my father, then teaching those sales and marketing techniques that he learned inside of my grandfather's firm, my father's firm, and then ultimately taught them nationwide to over 5,000 accountants, and still does. In many respects. And then, of course, I also had my accounting firm, as you alluded to, inside of the opener here. And once I had my firm, I kind of realized that there was this whole digital atmosphere, this whole new way of client acquisition. So we really pioneered a lot of new techniques inside of that firm. And now we take those techniques and and obviously teach them to a wider audience.
I love it. So I'm curious, you're in this family environment, grandpa, dad, they're obviously working with accounting professionals. They themselves are accounting professionals. Did you intentionally choose to go out on your own and leave the family business? How did that happen to where that transition occurred?
Yeah, that's a very interesting point, and I'm glad you brought it up. But essentially, what ended up happening is when we started the accounting firm with my father, there was a little bit of a difference in philosophy and principle. There's the tried and true methodology of what New Clients Incorporated had been teaching, which is very heavily based in outbound cold calling and some very, very strong foundational and fundamental sales techniques. And there was sort of me looking to go in a slightly different direction, in terms of how we were choosing to invest our marketing and advertising dollars to attract new clients and explore things on whether it was Facebook or LinkedIn or Google Ads, or how we were using our website. And so it really wasn't necessarily a point of contention. We worked very well together during the accounting firm. But what ended up happening, and it's really more of a tragedy than anything else, is the gentleman who was responsible for processing the work was neither myself nor my father. It was a family friend of literally 30 plus years. I knew him the whole time, I've been on this planet.
Uh-huh.
And he passed away rather suddenly during our third tax season.
Oh my.
And yeah, it was tough. It was definitely very tough. And so long story short, my father, entering his golden years, kind of wanted to, let's just say, slow things down where I wanted to speed up. And he wanted to focus more on practice sales with his entity, New Clients Incorporated. So if anyone's looking to acquire or sell a practice, I would encourage you to reach out to my father. But I was looking to say, hey, we can really change the game in terms of client acquisition with the digital marketing and online client acquisition techniques we really mastered inside of the firm. Because he wanted to sell the business and so on and so forth. So we just said, hey, let's part ways amicably here, and that's pretty much how it went.
So you part ways, and your father continues with his business, but you started your company. Was it intentionally to offer bookkeeping services, to help others sell bookkeeping services? What was your passion in creating your business? How did you think you were unique?
Yeah, I think that what we realized early on was that, similar to the value proposition that most accounting, bookkeepers, and tax professionals look to make to other small businesses, which is, hey, you stay in your strength zone, your zone of genius, where you can deliver the most value to your business. But let's not neglect the importance of this particular area, right? Whether it's accounting or whether it's, hey, you need to develop a 21st century marketing approach to your business where you can get leads effectively online. So the idea was, okay, New Clients Incorporated doesn't want to offer this, but we know that the market needs it. And we know that since we did it ourselves, we're more than capable of either teaching or building it to other individuals in this specific capacity. So that was kind of, again, the indicator of like, we know the market needs this. We know this is the direction it's heading in. And yeah, that's essentially what we decided to do.
Okay, so you start your business. What is that unique message that you're bringing to the accounting community?
I would say that there's nothing mythical about sales and marketing. I look at accountants, bookkeepers, and tax preparers effectively as really good at solving issues in the sort of finance department or the finance pillar of people's businesses. And the issue to me is that those same systems that they're capable of building for other businesses in that finance pillar, so that they can have that sort of clear understanding, so business owners don't have to spend their time in it, but get consistent, excellent results from the accounting functions of their business and make smarter decisions. Well, that's the same thing that they can and should be able to do on the marketing side. A lot of people tend to think that there's some sort of magic or silver bullet in lead online client acquisition or generating leads. And the truth is that there isn't. There's a holistic approach, and there are certain systems that have to be built that attract interest and get people to take a desired action. And if you can essentially understand that it's nothing more than generating high quality clicks, generating high quality calls, and then generating high quality clients. That's it, right? I mean, you just have to know how to do each part of that funnel system, whatever you want to refer to it as. And then all of a sudden, the marketing side of your business is running much more efficiently than it otherwise would if you hadn't actually built consciously systems to attract and win the business of your dream clients.
So let's kind of break this down for our listeners and maybe put this into some little chunks, bite-sized chunks. How would you distinguish between marketing accounting services and selling accounting services?
The difference between getting someone to raise their hand, like they're interested, right? It's one thing to get 100 people in a room, or let's say 100 people out of 1,000 to say, hey, I'm interested in that, right? Everybody hears the same message. Everybody looks at what you have to offer, and it's going to speak to a certain percentage of them. Those people are going to say, I'm interested. I would look at that as a scheduled phone call, maybe a click through to your website. There's variations in that, but effectively, that's effectively what we're trying to do with marketing, is get more people to look at you and get them to indicate their interest.
So marketing is lead generation. It's finding where can I go to tap into and get the attention of that business owner that perhaps is the ideal type of client I'd like to get, to where they raise their hand and say, I am this business owner and I'm interested in what you have to offer. So now we have perhaps contact information. We have an individual that could benefit from our services and we know who they are. That marketing effort worked. Now we've got to sell to them. We know who they are. Now we've got to do the next thing. So what defines sales for us?
Well, I talk a lot about sales. It's one of my favorite topics. And sales is getting the agreement. It's getting the money. Absolutely. It's, of course, all of those things. But I tend to think that when we focus on that specifically, Roger, and I imagine you'll agree to this, is that that's when we end up getting kind of the happy feet, getting a little nervous, feeling like we need to use maybe like high pressure closing techniques, or these things I see a lot of other people talking about a lot in the market. But when I think about sales, fundamentally, what it is and the most effective way to do it, it is nothing more than the transfer of emotion between one person and another. If you, as that accountant service provider, really believe that your services and the solutions you can offer to that business owner will fundamentally change their life for the better, you will exude a certain type of belief, a certain type of positivity that will literally infect that person. And that is me. That to me is effectively how you define sales in a way that's conducive to creating the most optimal selling environment possible.
I love that, because you're right. I think too often when we talk about sales, what people conjure up in their mind and imagine is the asking for the sale, the details of the engagement. It's the engagement agreement, the contract. It's all these technical things. But in reality, we've got to back up here a little bit. And like you just mentioned, it's a convergence of emotion. And I describe it as building rapport. It's that moment when the business owner feels from you a sincere, genuine interest in their business, what they do, how they do it, how they're profitable. And when the business owner then is relaxed enough to all of a sudden see you as the expert and believe that you're genuinely interested in their business beyond just doing the work for them, all of a sudden they're willing to now start sharing information, volunteering their story, basically trusting in you. And now the engagement, it's less of a financial decision. It's less of a financial choice. It's more of an emotional decision, which most sales are, because I like you, I'm comfortable with you, I feel that you are interested in my business, I can relate to you, I can confide in you. All of these things start to come up. And then when the engagement is offered and the price is quoted, it's an easier decision simply because that sales process of having them see you as the expert and see you as an approachable, somebody that they can approach and confide in, becomes now, I can make this decision comfortably and I'll pay you for your services. So I like how you described that. That was well said.
I appreciate that, and I really like a few of the things you stated there. And if I may just add one last thing on this particular topic, because I love to talk about this. One of the things that I think people really struggle with during the sales process is thinking that they have to be this Wolf of Wall Street, this Alec Baldwin, this like slick, aggressive, has all the answers. And that's really where I make the divergence between what I believe is a very effective sales approach. Notice I said has all the answers. And I much rather like to think of it as ask quality questions. If you can simply, and this is to your point, right, Roger, which is you're effectively saying if you're curious enough about that person's situation and you can exude that curiosity, not because of what you're telling them, but because of how you're treating the conversation and showing
Mm-hmm.
that you're
Mm-hmm.
vested in them and their business. Well, the only way that you can show that, and this is just such a simple way to think about sales, is by asking really good and really sound and really quality questions, because this is the crux of the entrepreneur. And Roger, you're an entrepreneur. I'm an entrepreneur. I imagine everyone listening to this is entrepreneurial in their spirit. Entrepreneurs, we like to have our thoughts stimulated. We like to be asked great questions. If you try and tell me something, right? If you try and just say what it is, I might hear it. But if you guide me to the answer strategically based on how you ask your questions and how you formulated them, it's so much more powerful fundamentally because they created the answer. They created the desire, not because you told them to desire it, not because you told them you're valuable, but because they realized it because of how you conducted your consultation, your interview, however you kind of want to phrase that. But I just think that's such a critical element to get across, is that it's not about having the answers. It's about being willing to ask the questions.
As you're describing that, I'm hoping all the listeners are able to reflect on when they've pitched or sold or tried to get a new engagement and reflect on what was that conversation like, because the way you described it is a very good depiction of what the experience should have been like, right? And so often when I'm consulting and talking to accounting professionals and you dive deep into what that conversation is, I'm saddened when I hear that the conversation begins with an explanation of services, how long we've been in
Yes.
business, what we do. And in reality, none of that matters until rapport is established. And so one of the things we always teach is first go on a tour of the business, ask about when it started, tell me about how you got involved with the company. Did you found the company? And as you get them to open up and through, like you said, I think the word curious is so important. As you're curious about them, they'll start to feel more and more comfortable. And in the course of the conversation, they will naturally get to a point where they're going to say, so tell me about you, what it is you do. And now they're not hearing it from you because you started the conversation because I need to tell you this. It's now they're interested. They're asking you questions. Tell me more about that. Tell me about this. Now they're curious about your business. And now it's that emotional connection that you were alluding to earlier. This sales process is so much more comfortable for the accounting professional because by nature, even though we're entrepreneurs, we tend to use the phrase accountrepreneur. We're accountants first. We are more analytical. We're perhaps more reserved or maybe introverted. Those are the stereotypical things that come to light. But in all honesty, this is a people business, and you've got to connect with the client at that level. And once that occurs, the interest of doing business with you is far easier. So I love this conversation that we're having. Like you, I think we could discuss this entirely, and we'll be just totally fine. So give me an idea of when you're working with an accounting professional, what's a mind block that they're facing that when they stereotypically think of sales, they're missing the mark, and you have to educate them that they're wrong. It's so much easier than what they're imagining it to be.
Oh man, there's so many ways to answer this question, and it's a spectacular question. Going back to again quality questions, but I'd say that it's probably a combination of being comfortable in the pricing, being able to like have a quote that they are comfortable with during the phone call, because I think most people, when they start discussing money, and somewhat rightfully so, that they get nervous, right? I mean, am I overcharging? Am I undercharging? Am I in the right space here? Do I need to negotiate? All of these sort of doubts, I think, kind of flood in very quickly because they don't really understand pricing principles. And when I have this conversation come up when I'm speaking to entrepreneurial accountants, and I will say to them, I'll say, okay, let's just think about this again. Put yourself in their position. What is a reasonable fee? Like if you were there and you understood, let's just say, what their annual revenues are. If you knew that number, and again, 99% of business owners are going to know that number, and they're going to be able to come within, $5,000-$10,000 of what they did last year in terms of revenue. Mm-hmm. That's a good number to be able to understand their profit, a bit like how much money they have, how much spend tolerance they have for accounting. Okay. Now, if you know that number, well, okay, you know that number. If you were in that position, let's just say the business is only doing $100,000. And I know that's not like dream ideal client, but let's just say that that's the number.
Nice round number to start with.
Yeah, it's just an easy number, easy to do math with, right? So if let's say they're doing $100,000 a year in business, what percentage of that number should they be investing in their accounting, bookkeeping, or tax fees? And most people are like a deer in headlights. And I know it's a range, and I know it can be dependent on the business, but I'm just saying, okay, what should that be? And the number of times I'll hear 10% is sort of mind-numbing to me. And that's not to say that maybe in some world, in some industries, 10% is a reasonable number, but I immediately just say, okay, so before I've paid any other expenses, anything paid myself, I'm paying you $10,000 a year for accounting, bookkeeping, and tax help. Would you agree to that? And the answer, of course, is no. No, I wouldn't. And I say, okay, so we've established some relevance of spend tolerance. It's most likely somewhere below 10%. And then I kind of guide them through, well, what is included in 1%, 2%, 3%, 5%? What are the services that are associated with that? And so I think that if you can get more comfortable with the most uncomfortable part of the presentation by simply understanding what is a typical spend range that is acceptable for your target audience, that's one of the biggest self-limiting beliefs, is that they don't know how, therefore they immediately are afraid and they kick the can down the road. Like, let me get in your QuickBooks file. Let me send you a quote. And all of a sudden, like they've lost the best opportunity, which is when the person is on the phone with them to figure out, Roger, right? To even figure out if the person is worth following up on. If they immediately go, oh, that's, no way. Well, now you know. But if you just kick the can, send an engagement letter, can't gauge the actual reaction from the person on the phone, how do you even know if it's worth your time to follow back up with them? So I know that was a bit of a tangent, but I just really need to kind of like zone in on that, because it's one of the most criminally neglected part of the sales process, but it's one of the most mission critical parts as well.
Yeah. So one of the things that we kind of move towards is pricing. And the thing that I'd like to just kind of add to this discussion is, I think you're right about pricing from an accountant's point of view. You have to have a very comfortable, simple way of determining the value or cost of your services, so that when it comes time to quote your service, you're not humming and hawing as to what it's going to be. If you're not clear, and if it's not definitive on your side, what kind of confidence does the business owner have hearing you think, okay, this price is what it ought to be? If it's more deliberate and it's direct, I can have confidence as a business owner in, okay, this is a number that they are regularly quoting to other people, and I should consider it as a viable quote. And one of the things that I'm hearing from you is whether you're doing hourly pricing or flat fee pricing or menu pricing or value pricing or revenue pricing, you've got to have this range as you're describing it to comfortably be able to quote your client, this is what it will cost for my services. And in turn, you've got to be able to justify it with what's the value add, what are they going to get, what are the services you're providing. And the thing that I can relate to with this is from an accounting perspective, the more confident I am in how I come up with that number, the more easy it is for me to then quote it. If it's something from my gut that I'm just kind of off a whim as an ad hoc, just kind of throwing out there, the confidence in that number can be very, very speculative. But if I'm more deliberate as to, oh, well, you're a business this size doing this kind of work, and this is what's going on in the accounting today, my fee for my services is X. That confidence is what's going to be able to ensure a more likely engagement moving forward. So I like how you've described this already as to knowing that percentage. The only thing I would add to it is I think a lot of accounting professionals having experience working in other businesses from an employment point of view can usually have some context to, okay, the business is a $3 million business and it has X percent allocated to the accounting department already. And when I was working there, they spent this percentage on accounting services. Once you have some familiarity there, that number becomes a lot more comfortable because it's something in your own work history you've experienced. And so that's just a context element that I'd like to kind of throw into the discussion. But here you are, you're saying I should have a range. What range is appropriate for a firm to be paid when working with a client and it's based on revenue?
Yeah, no, I think that's a spectacular question. And just very quickly on that contextual point, Roger, that you brought up, which is sort of what is the actual industry average if you maybe had that in-house accountant, or if you really were already inside of a larger business doing 3 million, maybe they kind of have that CFO. That to me is one of the most important things that I think oftentimes gets overlooked, is that if you have access to that information, it's a fantastic way to juxtapose what your value proposition is against what it would typically cost to be able to do it in-house. Now, if you want to be priced at the same level, that's fine. But most people are essentially saying, hey, your outsourced solution, you get all the benefits at a slightly reduced cost. Why wouldn't, or a significantly reduced cost? Why wouldn't you consider or try that? So again, if you have that information, think about how you can potentially use that as a way to justify your pricing and your value during the sales process.
Okay.
Can you remind me of the question one more time,
Well,
Roger?
no, actually, I think you've answered it. Actually, no, I asked specifically, is there a percent? You brought up a percent, and I was asking, is there a particular range that you would suggest, just because you had brought it up earlier?
Yeah, no, perfect. So the way I try and make sure my clients understand this is, I know everybody talks a lot about premium, ideal clients and being able to attract and win them. And believe me, you're capable of doing that. However, I think that the problem most people run into right now when they're pursuing that is they only focus on the top end of their value ladder. And for the people who are unfamiliar with what that term kind of means, it's essentially the idea that a certain percentage of your potential buyers will buy your max service package, your tax planning, your audit protection, your tax filing, everything you have to offer, right? That's a max tier buyer. And for me, the way I kind of explain it to my audience is I like to say, if they're a max tier buyer, they'll typically have a spend tolerance somewhere between 4 and 6%, depending on the industry, of annual revenues. Okay. Now, not everyone is going to fall into that category, right? That's just the nature of the beast. They're just not all going to be in that area. So are we going to say no to what is effectively 80 to 90% of the market just because they're not coming in at our top value? Of course not. That would be an incomplete business. Or to kind of steal a Shark Tank analogy, you're just a product, right? You're not a business. Yeah. You're a one-trick pony. And so, okay, well, what's one step below that? And I like to refer to this as more of like the max compliance package. There's max compliance, max advisory. That's your top level. Okay. Max compliance is everything related to your payroll, your books, your compliance, filing your returns, anything that's related to compliance. I'd say, okay, you're probably somewhere in between 2 to 3% in that general range. Okay. And then if it's anything below that, let's just say it's sort of like, hey, you're 100,000 to quarter million business. They're not really ready for max compliance, even though I think you should try and get them into that. You're going to say effectively, all right, listen, you just feel like you need a tax return. You have an in-house bookkeeper, but you need someone to get an extra set of eyes on the books. You should still have them on a monthly service engagement, in my honest opinion. So look, we'll do it for 1 to 2%, 1 to 1.5%, and that's going to include the tax return and a quarterly check-in call. And just very quickly, Roger, that quarterly check-in call is always an opportunity to move them into max compliance. That's effectively why it's there. Because if you're checking in and you can see them growing and you can see issues reoccurring in the books, or that there's a penalty that's laying in wait around the corner, guess what? That's when you go, listen, we got to get you into max compliance now. So again, it's meant to be strategic. From the standpoint that we want to have multiple touch points, even at the lowest level, because we want to ascend them to eventually that max compliance and max advisory space.
Yeah, the thing I really liked about what you explained there with the tiers is even at the lowest level, your curiosity of the business is going to be basically furthered because you're getting the numbers, you're getting that familiarity with the company, and it's going to cause you to learn about the intricacies of what's going on in the business that's going to better prepare you for these other services that you can now, as you're meeting with the client, bring up and introduce them to. And they may have just been testing the water with you to begin with. Yep. So here's your chance to get in and educate them as to other opportunities to do business with you, other services that you provide. And now you're going to move up that tier as you were describing it and become that top tiered client.
Right. And look, it's hard to ask for marriage on the first date. And I think a lot of people are shooting themselves in the foot with what would be or could evolve into high quality clients simply by, I don't want to say having their nose in the air, because I think that's definitely the wrong way to express it, but it's simply by not being willing to capture more of the pie and recognize that most high quality clients, they grow with a firm. There's only two types of clients, right, Roger? Potential clients, excuse me. I'm switching from a current accountant. There's a problem, figure out what that problem is, or I've never had an accounting professional before and I don't quite understand the value of this service quite yet. And there isn't a ton of the people who already have accountants and are looking to switch. The vast majority of opportunities are going to be people who have not had accounting professional relationships yet. So it's just sort of a recognition of the reality of the situation, which is you should be looking to welcome in more, not less, but have a conscientious decision inside of your firm to make sure that if we're bringing in more, we have to make sure that we understand we can get more, but sometimes it takes a little bit of patience and it just takes a little bit of an understanding that if you structure it the right way, it will happen naturally.
Very good. Yeah, I liked how you brought in that analogy of asking someone to marry you right at the very beginning. There's something to be said for some of the clients that we'll have are just, if we're using that analogy of relationships, they're just a friend. It's an occasional person you do some activity with, and they're good to be with, they're fun to be with. But there's something to be said when you get into a more of a relationship with someone and they become like a girlfriend, boyfriend. There's a little bit more familiarity. There's more of a desire to just spend time together, not just an activity, but downtime. You just like being in one another's presence. But then there's something more to be said when you become married. All of a sudden, you're now vested together, and there's interest in making decisions together. They need your input. They need your perspective. They need your insights. And those things become much more valuable and appreciated, and they're paying for those. And so a lot of these deep conversations about how to grow the business and whether or not to launch a particular product or whether or not to get rid of a certain product line, all these decisions are ones you're having with that person that's embedded with the company because they're a trusted strategic advisor versus someone that's just a friend, an acquaintance, somebody that you see once in a while and that is interesting and fun, but you're just not going to have that deep conversation with them necessarily. We want to move up that ladder, and from an accounting perspective, build relationships with each of our clients that are going to be long-term in nature. The average lifetime expectancy of a client is as many as 7 years. And so if we see that it's going to be worth our time to be curious and to build on that relationship and really get to know the intricacies of how they make money, that's huge. So I like this analogy that we're building here in the conversation that we're having. So I'm going to back up. I want to back all the way up to marketing and realize all of this sounds great
Sure.
and dandy. I mean, in fact, I'm excited. I want to get my next long-term relationship and I want to do this. But sometimes marketing is just elusive. What is that new, sexy, smart place that I need to be going to run into this great new prospective client, this ideal client? Where do I find them? Where do I go? What's a great, effective way to generate more high quality leads?
Yeah, this is a fantastic question and one I get a lot. And let me be clear, I'm not dodging the question because I think that the issue most people have with trying to answer this is they'll say, "Oh, you got to be on Facebook, right? Or you got to run Google Ads, or you got to be on LinkedIn," or they'll suggest one of the mega platforms. And okay, sure, those things have their role. However, I think that the primary question isn't necessarily where should we be going. It's who am I actually looking to target? And this comes back to defining your ideal client, understanding who you want to work with in excruciating detail, not just saying, oh, small business, 0 to 15 employees, up to 10 million in revenue, has a pulse and lives somewhere in North America. That's going to make it exceptionally hard to get heard. Why? Because how many other accounting firms effectively have the same exact target market? And I know you're aware of this, Roger, and I imagine your audience is largely aware of it. This is the primary difference between the generalist accounting firm and the specialist. And the specialist simply cannot compete with the generalist. And here's why. Most people come to Roger or they come to Tyler. Why? There's a lot of places you could learn sales and marketing advice from, right? But you come to us because we're specific to a particular industry. So I always want my clients or anyone listening to this, always ask yourself a fundamental question of why you say yes to certain things, because you will be your own best teacher when it comes to understanding what works in marketing. And what you're going to find most of the time is that there was some type of specificity, there was some type of localization to what your particular market need is, that ultimately that person was saying, that's what I do. And this is a tough thing for most people to want to do, because what they think of is they think, well, if I cut out 95 or 99% of the market, I'm screwed, right? I'm already struggling trying to work with 100% of the market. So what happens when I say I just want to target digital marketers, or I just want to target real estate or dental or whatever? All of a sudden you become a beacon for your ideal client. And ultimately what happens is you now have an understanding of where you should go. If you're trying to target restaurant owners, I'm telling you right now, Roger, you're probably wasting your time on LinkedIn, because restaurant owners are not looking for B2B opportunities,
Mm-hmm.
right? It just doesn't make sense. Your time is going to be way better spent on a platform like Instagram. It's going to be way better spent on a platform like Facebook. I can also tell you right now, if you try and bid on AdWords for restaurants, for accounting specific services, you're going to have a tough time, because there's a lot of really well-established brands that bid high on AdWords. So it's never, to me, here's the silver bullet, here's the golden place, here's Bark, here's Thumbtack. It's about being very strategic with a conscious decision that if you say no to a vast majority, you're going to be a screaming yes for a smaller portion of the market. But that is what you need to have a successful marketing and advertising initiative inside of your business. Can you be a generalist and still have success? Sure, absolutely. Is it going to be harder? Yes. So I know that's a roundabout way of answering the question, but to me, it's never just like, go do this one thing. It's understand who, find out where they spend their time, and then go to those platforms.
Yeah, what I heard you say there, and I think this is what everyone needs to hear, is the right marketing solution is unique to your business. So as you were describing it, as we choose to either niche or specialize in a certain industry, the place to market becomes more and more clear or obvious. And so it's not an easy question to answer just generically, where should I be marketing my accounting services? What can I be doing to generate leads? Let's first identify, what is the ideal client? How would you describe them? Create that avatar. And as you've identified who that ideal client is, all of a sudden the marketing becomes more and more obvious. And that's where we need to be spending our money. So then let me ask you, what kind of funds, what kind of time should an accounting individual firm place on marketing efforts?
So this is, man, you got the best questions, Roger. So this is a fantastic question, because I think what most accounting professionals find themselves doing is they would be lucky if they spent 5 or 10% of their working hours on their marketing and or sales efforts. Okay. And the reason I bring that up is, when I work with my clients, I get them to understand effectively there's 5 pillars every single business has. You have your marketing, getting people to raise their hands and say they're interested. You have your sales, that is effectively getting the agreement. You have your delivery, which is delivering on the promise that you made on your sales. You have your operations. This is effectively how the 5 pillars interact and operate with each other. And then you have the finance function of your business. Those are the 5 pillars every business operates by. Now, as a general rule of thumb, the marketing pillar of an accounting business is criminally neglected. And you will not get results unless you invest your time and or, usually both, your money into that particular pillar of your business. So, what the question is, again, like how much should they spend? How much time should they invest relative to your growth goals? As always, if the firm that wants to get to $500,000 in new business in the next 12 months, very aggressive growth goal. Okay. If they want to do that, well, if I told them they had to invest $250,000 to be able to do it, they tell me I'm crazy. But I'm basically saying you're going to double your money on yearly, annual recurring business. And the reason I bring that up, Roger, is like, you have to be painfully realistic about the value of these clients, right?
Mm-hmm.
Like these are clients that are coming to you with monthly arrangements that need you effectively for the life of their business. When you're willing to grow organically, you also get more referrals. And so if I had to give a specific number to what is a reasonable spend amount, the way I like to try and make sure people understand this is that if you're looking to, let's say, work with a $300 per month client, okay, you should expect to advertise for about $300 for an opportunity to speak with that person. Now, that might sound high, and I know I said opportunity. I didn't say get them as a client, but if you have a closing percentage of 30%, okay, and you speak with 3 of these people, that'll cost you $900, okay, in ad spend. $900 out. You had 3 opportunities with 3 quality clients that would have been in the spend range of about $300 a month. Awesome. Okay. You close one of them and they're worth what? $3,600 a year. If you go to sell your firm, they're worth that plus maybe another 50%. You could say that client is worth $4,000 when the firm sells, plus they're worth $3,600 a year, and you spent $900 to get them. And so I just try and use that as like, that is the most realistic picture that I could possibly paint for what the opportunity is that's in front of you, if you're willing to participate in it in a smart way. And the smart way of doing it, Roger, is what we said before: understanding your market. After you understand your market, what is the message that would resonate with them? What is it that would speak to them and get them to take action? And then the next part of it is moment, right? Market, message, moment. If you nail all three of those, if you're there at the right time when they have that problem with their existing accountant, when they're ready to make that move, when they get hit with that tax penalty, and either your adverts there, you're participating in their Facebook groups, whatever it is, you then become the right solution. Guess what happens? The fourth M comes into play. You make money. Market, message, moment, you make money. So I know that was a long-winded answer, but it is, again, it's a tough one to say this is definitively what you need to do, because it's always based on the growth goals and ultimately kind of what the firm is looking to accomplish.
So what I heard there was, 4 M's. That was a joke, by the way. All right. So what I wanted to focus on is the fact that you did a great job of summarizing essentially what this whole marketing effort would look like. I mean, you culminated it with, you've got to have a unique selling proposition. You've got to have something that's special about you, but none of that matters unless you're there when they have the need. And so to have that social presence you were speaking of. But the thing that I think is most important that a lot of accountants really struggle with, and you nailed it, is how do you come up with how much money you're going to allocate to your marketing and sales campaigns? How much are you going to invest in acquiring new clients? And that's an elusive number for many firms. They're like, how much money do I really invest? Whether I'm a solo entrepreneur, a single bookkeeping, accounting, tax service, or an established accounting firm, how much money should I really be allocating to acquiring new clients? And you're right. When we backwards engineer it and we look at, well, what's the lifetime value of a client? Well, what are they making for us in revenue on a yearly basis? Well, if I know that, I know what I'm earning per month on that client. Well, if I know that I can speak with, in your example, 3 potential clients and close one of 3, that's a 33% closing ratio. Well, then I know, well, I need to get how much, how many leads to then put into my sales funnel and obviously pitch. Well, backwards engineering it, I loved your example. An average client, $300 a month. I usually use the round number of $500 a month. $500 a month for bookkeeping and accounting services. That's $6,000 a year. The lifetime value of that client is 6 times 7. Okay, so you've got a substantive client here. They have value. You actually brought into the equation that if and when you sold that client, they have a return on that value. So it's even beyond that. So all of these numbers help us get down to that all elusive. Well, how much am I supposed to be spending? Well, if you're spending, say, $300, $400, $500 to get a new client or to get leads, and maybe it's $1,000, $1,500 to get a new client, all of a sudden, that client cost you $1,000, but you're going to make $6,000 on them this year. In the course of the next 7 years, you're going to make thousands more. All of a sudden, that $1,000 cost becomes much more palpable and manageable. I can see it, I can understand it, and I can actually digest it now. And so I'm ready to now. I'm actually almost excited. I want to spend $1,000. Where do I go spend $1,000? And that's become more clear because of what we said earlier. Define your ideal client, identify where it's best to market to them, spend that $1,000 intelligently there, and all of a sudden you're going to be getting the leads, closing the leads, and getting the clients that you deserve. So this whole conversation, I mean, we're nearing an hour here in this dialogue, and look how much we've covered, and it's flown by. I mean, there was so much more that I was hoping to accomplish with you. So here's what I'm going to do. I'm going to mention something here about our sponsors, and then I'm going to recap our conversation. And then I'm going to ask for a closing thought. So let me just first of all point out that our first sponsor is Universal Accounting Center, and they're offering today a book that you need to get a hold of. It is In the Black: 9 Principles to Make Your Business Profitable. And in there, we speak of the principles of mapping a business. And it's literally what you need to be doing in your company to ensure that you're actually focusing on those 3 things that are essential for your success. Also, you're learning the 9 principles to be profitable. What are the 9 things that you need to be doing within your your company to ensure your profitability. These 9 principles are effective within your company, but most importantly, once you become comfortable with them and implemented them in your company, you're able to then take these same principles to your clients and help them understand how they also can now be profitable in their companies, applying the principles from the book In the Black. So go to the episode description of this podcast to get your copy of the book In the Black and see what it is you can be doing today to ensure your business is successful and profitable as you're offering these quality accounting services. Secondly, Tyler's been very generous in offering to us this wonderful opportunity to go get and see how you can systematically add 6 figures of new growth to your accounting firm with high quality clients. In the product or in the program description, you'll actually have a link there to go get a free training and see what it is you can actually be doing today to implement these proven strategies to literally grow your business and put money in your firm with new effective marketing and sales strategies. So real quickly, Tyler, what final thoughts would you like to add or share with this group? And then I'll go ahead and do a quick summary of our conversation.
Yeah, if I may say 2 things. The first one is Roger is fantastic. My father has spoken highly of Roger and Universal Accounting since I imagine we were even aware of their existence. That type of praise from my father is hard to get. So Roger has clearly earned that respect in the market and has been doing it for a long time. So I just want to say first and foremost, thank you so much for the opportunity, Roger. It really means a lot, and I can't wait to go and speak to Bruce about this. He's gonna get a real kick out of it.
Excellent.
And in terms of yeah, no, absolutely. And then in terms of kind of maybe just one major last thing that I would leave your audience with is that the reason we call ourselves dream firms is because it is so critical that you understand what your dream accounting firm can do for you and your life. And the reason I bring this up is we oftentimes get into business and we find ourselves trapped. We find ourselves working more hours for less money when originally we thought we'd be making more money with less time and spending more time with our family and friends. And this is such an important thing to just understand is what does your dream accounting firm look like? Why does it matter? Why do you work as hard as you do? And once you crystallize what that means, when you truly become impact driven, I fundamentally believe everything gets easier. And if you want to make things simpler and you do want to win back your time, you focus on building systems. And systems are nothing complicated. Systems are just having the right person, the right process, and the right tool so that when you look away from whatever that thing is doing, whether it's in your onboarding or whether it's getting new leads, whether it's whatever it is, when you look away from it, does it immediately collapse or does it run? And if it runs, guess what? You can now focus on working on your business instead of in it. So again, focus on that why. When you determine that why, everything gets easier. And if you do anything today, tomorrow, see what you can do in terms of building the right system that ultimately frees you from your business.
I love it. Thank you so much, Tyler. I think it's very important that we never lose sight of our why. It's that passion that gives us the energy to keep going. And when trials come, when trying times appear, it's that passion that's going to get us through that. So I appreciate that. I think that's very, very important for us to remember as accounting professionals. As a recap, let me just kind of summarize a few of the things that I have as highlights from this conversation. One is it's quite obvious Tyler has a passion and a history of expertise here offering accounting services. Basically the tips, the tricks, the tools that are needed to market and sell accounting services effectively. I really believe that here we've summarized a few of the key elements of, first of all, what does it really look like to market and sell effectively accounting services? How much revenue should we be allocating to really our marketing to get the clients that we need to grow our business? It's not something that just happens. We need to be deliberate about that and be willing to commit those types of revenues. It's the old adage of it takes money to make money. But then once we get to that point, we discussed a number of things related to pricing and how do we go about determining what our fees ought to be for services. And I thought that discussion was wonderful, summarized very well. Tyler did essentially what those percentages of revenue ought to be for a firm so that you can actually make sure you're getting paid and moving clients towards becoming that high-tiered client that you want as an engagement. The other thing that I think is quite obvious is Tyler has a lot to offer. And so go back and re-listen to this episode and really dive into the discussion. If you haven't taken some good notes, I think it'd be a good thing to go back and rehear some of the tips and tricks that were shared here today, because they're obviously meant to help us each make sure that we're not losing focus of what matters most. Even as good of an accounting professional as we may be, nothing happens until we make a sale. You can be a phenomenal accounting professional, but without clients paying, it doesn't matter. So Tyler really brought that full circle, and I appreciate that input. I encourage you now to go listen to our other episodes as well as subscribe to our podcast and see what you can do to work on your business, because this podcast is dedicated to helping you build the premier accounting firm. And so with that in mind, remember that accounting success is universal. And I do invite you to also visit us online. You can go to universalaccountingschool.com for additional tips and resources, as well as trainings to ensure that you're offering the quality accounting services that you need to in order to get paid what you're worth, or give us a phone call. You can reach us at 801-265-3777. Do take care. Have a great day. And again, Tyler, thank you for being on the show.
An absolute pleasure, Roger. Thank you for your time.
Bye-bye.